Hi everybody, Rich Gaines here with Business Growth by Design. I help business owners to make money without actually having to make more money. I don't know about you, but I really like that idea. That's one of the things that taxes can do. When we save you taxes, we're saving you money and you don't have to do anything. My tip for today and what I want to share is about payroll. One of the worst things that you can do is to take money out of people's paychecks and spend it on creditors and not give it to the IRS. When you have payroll deductions, you are required to pay that money over to the IRS, and the failure to pay those payroll taxes can be substantially create a massive hardship for you. In not paying payroll taxes, there's a concept called the civil penalty. The civil penalty is roughly about 60% of the payroll that you were supposed to pay over to the IRS. What that means is, let's say you had a total payroll obligation between your corporation and what you took from your employees of $100,000. So the corporation owed roughly $40,000 of that, and the $60,000 came from your employees. Well, I know business owners. I know their first thing that they're thinking about is, I got to stay in business. I got to pay my suppliers. I got to pay my vendors. I got to do the things that I need to do to stay in business. And so they'll take that money and they'll pay those suppliers and vendors. They'll pay their rent instead of paying that money over to the IRS. What happens is the business gets in trouble. They continue to have financial difficulties, and the IRS will look at your responsibility and whether you had control over being able to pay those payroll taxes. When that happens, they will come after you for what's called the civil penalty. The civil penalty means that you personally have the obligation for about 60% of the total tax. So on our example of $100,000, you're going to be personally responsible for $60,000 of that payroll tax. If your corporation goes out of business, you personally will have to pay that $60,000, and it's not something you can get rid of in bankruptcy, at least the last time I checked, which was a long time ago when I did bankruptcies in my early days of my business and my law practice. So the payroll taxes are one of the few things that I absolutely recommend that you never get behind on those, that you make sure you stay up on that. Because really, when you think about it, if you can't afford to pay those payroll taxes over to the IRS, you can always bankrupt out or get rid of the creditors or negotiate with them until the business gets back on its feet, or in the worst case, if you do go out of business, then unless you have something like a personal guarantee, you can always deal with the creditors, but the IRS you can't get rid of in this way. Thanks for listening. That's the tip for today. Bye for now.